Welcome to TheoTrade. This is Don Kaufman. It's August 22nd, 2016. Here we are doing the Theo evening video. Really what comes to mind when looking at today's trade is kind of instability in what has been an incredibly stable market. And the instability comes by way of taking a look at the S&P futures here, they're still trading. We have about 20 minutes to go in the trading session. The volume out there is nothing too unusual. We're doing about 1.37, 1.4 million contracts on the trading day. If I zoom into some of the recent trade to take a look at kind of standardized volume on a day-to-day basis, you can see again today's volume is nothing unusual. We've had again substantially less volume in the S&P futures given the fact that, well, they're massively unchanged in a day-to-day basis. However, when I say there's instability in an otherwise stable market, take a look at the intraday trading today. So anytime that I see what would be considered an unusual trade, I would kind of bring it to the surface. Well, at the open this morning, heavy contract size is the usual. Now, people might be listening to this in the evening and think to themselves, well, listen, I don't trade on an intraday basis. And that's okay. You don't need to trade on an intraday basis. However, what I'm trying to display here again is some signs of instability in a marketplace. And as such, if you look at the this kind of breakout move to the upside over here, we haven't seen moves like this lately. And again, to zoom in here specifically, this is a move in a very, very short period of time. This is the real start of the move. That's at roughly 2177. Okay, just a few minutes later, we're all the way trading 2182. All right, not too substantial, whatever. It's a 4 or 5 point move. What is substantial is the volume that we broke out upon. Anything over 10,000 contracts really kind of catches the radar screen, right? 10,000 contracts in 1 minute on the S&P futures is like some of the most extreme volume that you're going to get. Now, we'll fast forward. That I can accept, right? The volatility then just totally dies out. The volume dies out. We end up again in like a 1 point range. Then just about an hour later, the exact same thing happens where we start to see heavy contract size. Here's 9,000 plus contracts. Then we have a minute trading 12,000 contracts. And again, to do this justice, you almost have to zoom out. It happened, okay, in a period of roughly speaking 1, 2, 3, 4, 5 minutes. To where we traded again from the range of 2180, 2181, all the way down into the 2176 handle in a period of 4 minutes, again on heavy volume. So as the day progressed, I figured, what is this? This is all right, whatever. It's it can't possibly be much going on over here, until of course it happened again. All right, so this is once, twice, the third time. The third time I'm like, all right, there's some huge activity obviously in play. On this third time, it was even more intense. The algorithms were all over it. We traded almost 20,000 contracts on a 1 minute basis. This only took 1, 2, 3 minutes. 3 minutes we traded from 2177, to 2182. So what are we looking at in here? I'm sitting there watching it again very, very carefully, and again, it appears to be some extraordinarily large hedging activity at this point. Okay. At first, I thought it was a news event. The second time around, I'm like, all right, maybe another, somebody tweeted something, like a Carl icon came out and tweeted something. There were no events. I looked at the timestamps. I looked at the physical trades, the trades going through. They were not extraordinarily large trades in size, meaning that I didn't see somebody try to buy 10,000 contracts at a clip. They were doing it with an algorithm. They were hiding their size in here. Nevertheless, it's a sign of instability in a marketplace. And where am I going with this? Okay, it's really simple. The entire marketplace right now can move 5 handles in a matter of 3 minutes? That is not what you see in a stable marketplace. All we've seen day in and day out, in recent trade is the exact opposite of what we just witnessed today. So there are signs of some instability kind of playing out, and it's playing out and kind of one of the largest products of them all, the S&P futures. Now, to take a look further down the list, there really haven't been too many standouts today. Sure, the bonds are elevated, right? The bonds were up and up fairly big. And much to my surprise, seeing the bonds rallying. Listen, again, the bonds are still stuck in a range exactly like the S&P futures are. But the bonds, their range has actually been relatively volatile. They're seeing 1 and 2 point moves on a day-to-day basis. All right, so the volatility of this tight range is elevated. And again, I've pointed this out time and again. I feel it's such an important concept that's being overlooked by most traders, that the bond volatility right now. All right, I'm looking at the TLT. I want to make it, product friendly for everybody, but the bond volatility now exceeds the volatility of the S&P 500. For all intents and purposes, the bond volatility now is higher than even the volatility index. Last on my list over here to look at, okay, and again, that should just be a warning, like bond volatility higher than the S&P. Oh yeah, that's normal. It isn't normal. It's just the furthest thing from normal out there, okay? Last but not least over here, I've picked up the VXST. If you guys have never looked at the VXST, it's like a 9-day VIX. It's getting bid up, albeit minimally today. We'll watch that over the next day or two. The shortest term volatility product, okay? Normally I wouldn't make much of this, but it is being bid up by 16%, which is quite statistically significant. Now, there's been times where we've seen the volatility get bid up and collapse right back down, but this met with the fact that we're seeing this like unstable trade in a market that's believed to be incredibly stable, all right, starts to piece together a little bit of a puzzle out there. Now, to kind of continue on this particular front, one thing that, again, most traders are not thinking about, not looking at, is in sheer respect to option contract size. Now, you may not be familiar with this, but every evening, all the contracts that are traded in the entire marketplace, and this is option contracts, are accumulated together. All right, there's a report put out by the OCC. It's the Option Clearing Corp. The average contract size this month of August, which has been an incredibly slow month, okay? By all measures, if you look at the S&Ps, I mean, it's been an incredibly slow month. But the option marketplace is still seeing an average of about 15 million contracts. Now, that's off from the pace last year. Last year, we were seeing just over 16 million contracts, okay? And that was in the month of August of 2015. Now, granted, August in 2015 saw extreme volatility, okay? What I'm getting at over here is we're still seeing fairly substantial contract size, okay? The options are still trading. The open interest is still accumulating. And I'll give you an exact point over here. If you take a look at a product like the SPX, this one product is still trading 666,000. It's going to trade almost 700,000 option contracts today, which is about, if you look at the Sizzle Index, 80% of the norm. Normal days has actually been doing even more contract size than that. Now, why do I bother mentioning that? Because the entire marketplace is trading 15 million contracts. This one product is almost 700,000 of those 15 million contracts. Add the SPX to the spiders, okay? The spiders today, what kind of contract size are they trading? Oh, 1.6 million. Do you realize that the vast amount of contract size that are trading in options, which again is heavy, all the liquidity, okay, in the options market right now is concentrating into major index and ETF products. What does this mean? We're concentrating our risk right now. All right. It basically means, as I mentioned this last week, the pile of risk is only growing. Every day that we move through, okay, is adding more risk right smack at this level. Okay, we haven't backed off in contract size. And when I say liquidity is kind of pooling, there's only a handful of products that are seeing heavy volume. All right, everything else on the screen, when I say everything else, you look at another product like, I don't know, look at something, out there like a Microsoft, okay? Or, Microsoft. So you want to take a look at a product like Microsoft. So bring up Microsoft. All right, it's trading 56,000 option contracts today, but it pales in comparison to one major index product. And you look at something like Apple, which is considered the granddaddy of all the equity products out there. It's trading about 319,000 contracts, but legitimately, there are about 10 products that account for over half the 15 million option contracts that are trading every single day. Why should this concern you? Why should you even be considering it? As all this liquidity starts to accumulate into a handful of products, again, the risk starts to mount. Speaking of which, again, most of the liquidity is coming into index products, stuff like the spiders, okay, stuff like the SPX. Want to know what other products starting to concern me? All right, the amount of liquidity that's trading in the VIX options as well. Here's a $12 product that's trading 300,000 contracts today, and that's only 70% of the norm at this point in the day. Think about it as we move forward over here. Again, the S&Ps are poised to close today massively unchanged. I guess if you are into technicals and so forth, I think anybody could see this here. It's forming, obviously, this enormous kind of wedge pattern. Neither here nor there. I want to see if this instability in an otherwise stable market continues to persist in the days to come. Again, today is the first day. We've also seen none other than a Monday options contract expiring in the SPX. Pretty interesting. We now have Monday, Wednesday, and Friday expiration. Stay tuned for more on that, and thank you guys very much here for joining us at TheoTrade. I'll be back on in the chat room all this week looking for a couple of trade opportunities. Have a great evening. Bye-bye.